So, Degas, what do I do? Based on what Carrie just told us, very interesting information. What do I do with the fact that Bank of America, they have the flow show, right? They're looking at big flows of money, institutional investors, et cetera. Their weekly flows, they had $46 billion into cash, okay? That's the largest since April of 2020. They had the first tech outflow since September of 2020 and the largest financials outflow since September of 2020 as well. What do you think that says about where investors think stocks are going to work best?
Yeah, Scott, that really says that what's happening is that there is a rotation, and the rotation is away from the very growthy, very expensive tech into those companies that have a valuation tilt. And what I mean by that, if you line up all the tech companies in a line, go from low value to high value, you can really see some opportunities now as you tilt towards the higher value, positive value companies. And so what this is really saying, there's a rotation occurring, and the investors are starting to make that rotation into those companies that have a true valuation matrix that is positive. And I think that's what we're seeing in this market. And we've seen it. If you go back to October, we actually saw that the value companies or companies with a value tilt started to outperform growth.
Okay, which takes me to Farmer Jim, because it sounds to me, Jim, like Degas is talking exactly about the kind of rotation that you have made because you have bought Cisco, the tech company. Cisco, not the food company. Why'd you buy Cisco?
Well, the tech company, to Degas's point, that is a value stock, and you can't get around that. It's almost an insult to say that, but it trades at a very decent multiple with a nice yield. And here's the thing. You've got enterprise spending picking up. That includes hardware, the servers and switches that Cisco makes. It includes software and security and WebEx, things like that. I think the first quarter earnings report will be important not only for Cisco, but for all of tech, to show that there are fundamentals, at least behind the big guys, not only Cisco, but Apple, Facebook, Google, et cetera. In the meantime, on Cisco, and I think this is important to our discussion right now, you look at the chart on Cisco, it's working right now. So I don't want to wait for the first quarter earnings report. I want to get in it now while the chart is so attractive. I think that applies to Apple and Qualcomm. I think you're supposed to get in those names now and not wait for the first quarter earnings season, because their corrections have already worked their way through. It's time for them to start performing again, and that's what I think they will do.
Yeah, how do you know that let's just say Apple, for example, stock went from 145 down to 120. Kramer and I were talking about it earlier this morning on Squawk on the Street, and his thinking was, he said, okay, it's come down a lot, but it wasn't down enough. That was his view as of a handful of days ago. Because he said, look, I thought I could get to 110.
Yeah.
And it didn't. But my question to you is, how do you know it still can't?
Yeah. So you ask, how do I know? And I've got to be humble. As an investor, you have to show humility and say, I don't know. But I very strongly believe that it has come down enough. It's at about 26 times forward earnings, buying back its stock, hand over fist. You've got phones selling. You've got services picking up. The fundamentals are there to support it. Now, where I may be wrong when I say I don't know, but where I may be wrong is maybe the first quarter earnings aren't what gives the catalyst, the spark to the shares. But if it's not the first quarter earnings, it's going to be the second quarter earnings. I go back to Jimmy. Jimmy has said all along, don't trade the stock, own it. Under that context, which I completely agree with, if you've got this pullback here of more than a correction, I think it's time to start buying the stock, whether it performs in the next 2 months or 6 months. That I can work with. That's a variability that I think we all can work with.
It's funny.